Hi, Denver. You know, as we wrap up 2024, it's time to reflect on our housing market's journey over the past year, especially since the Federal Reserve just cut the Fed rate again on Wednesday, December 18th. But what does that mean for you, really? Especially if you're eyeing the housing market as either a seller or a buyer, or more importantly, how does that affect you if you're here locally with me heading here? Because I have to say, spoiler alert, that the national numbers are quite different from our local ones. Now, if you want the latest housing update for Denver metro area, go ahead and check out last week's video. I put the link in the description box. This is where I talk about what our market was doing for November. We'll have December's numbers in January of 2025. You know, at the close of 2023, we were all optimistic about 2024, weren't we? After all, the Fed had just met in December of 2023 and promised us 3 rate cuts, which we hoped would lead to a swift decline in mortgage rates, especially since our hope was that they would mirror the rates we'd seen in 2020 and 2021. That was supposed to make buyers and sellers who'd been waiting on the sidelines excited get into the market or get into a home in 2024. So what changed? Well, the Federal Reserve maintained that higher interest rate longer than anticipated, waiting for inflation to approach their 2% target. And although inflation decreased significantly, it plateaued around 3% by mid-year. Then finally in September, the Fed made its first rate cut for the year, reducing it by 50 basis points, the Fed rate. But mortgage rates kept climbing throughout October, which here in Denver led to a slight increase in the inventory of homes for sale as buyers seemed to pause. Why the disconnect? Well, the Fed's adjustments to short-term rates don't directly dictate mortgage rates. Instead, mortgage rates are more closely tied to the bond market, particularly the 10-year Treasury note, which responds to economic growth forecasts. We would need to see significant economic downturns like a resurgence of inflation or unexpected recession, which could push mortgage rates lower. But who wants to vote for that? Additionally, the rate lock effect that I've talked about in past videos, as the golden handcuffs that homeowners have, those are homeowners with mortgages less than 4% that they got during the pandemic, played a bit of a role since some of those homeowners were hesitant to sell and face newer, higher loan rates. And we saw that in our low closed sales numbers throughout the year until, surprisingly enough, we hit October and November when closed volume was up. So it looks like people finally just decided to move no matter what the rate was, at least here locally in our Denver metro area. And also throughout the year, we've had a major hurdle with housing affordability. Despite increases in mortgage rates, home prices continued rising, not only on the national level, where the average price of a home now is sitting around, the $400,000 mark, even here in the Denver metro area. In our fall and winter months, which are supposed to be our slower months, we're seeing home prices rising year over year in October and November 3%. And that really is being driven by our lack of supply of homes for sale. Again, going back to that supply and demand model. We have plenty of demand, but a low supply, so pricing tends to stay elevated. On Wednesday, the Federal Reserve lowered its Fed rate another 1/4 percentage point, bringing it to the target range of 4.25% to 4.5%, the lowest it's been since February of 2023. And this marks the 3rd rate cut of the year. However, Fed Chair Jerome Powell again emphasized the need for careful assessment of economic indicators before proceeding with further cuts. And that comment has led the experts from Mortgage Bankers Association, Redfin, Realtor.com, and Zillow to anticipate that mortgage rates will hover between 6 and 7% throughout 2025. As we move into the final stretch of 2024, we're entering a week dominated by holiday celebrations, including Christmas, Hanukkah, Kwanzaa, and followed closely by ringing in 2025 in New Year's celebrations. Historically, here in the Denver metro area, this tends to be the quietest time in our real estate market. However, although active inventory has declined here in the Denver metro area week over week, it's still slightly higher than it was this time last year. So a great opportunity if you're a buyer ready to make a move. I've always felt that if you're a buyer, this is the best time of year to buy, if you're ready, before a typical hot spring market starts. Showings on properties have also slowed down week over week. However, once again, there's a slight increase year over year. So in spite of seasonal lulls, buyers are still out there ready to make a purchase. So while 2024 didn't bring us the housing market boom that many of us had anticipated, it's actually set the stage for some potential opportunities in 2025. Hi, my name is Peggy Durstoff, a realtor at Live Denver Suburbs, powered by HomeSmart. And whether you're considering buying, selling, or simply staying informed, feel free to reach out with any questions. In the meantime, I want to extend my heartfelt gratitude for your continued support and viewership. Thank you. As the holiday season is upon us, I want to wish you and your loved ones a joyous Christmas, Hanukkah, and Kwanzaa, filled with warmth and cheer, and a new year brimming with prosperity, happiness, and who knows, maybe even a new home. I will be taking a short break and I'll return with new content in 2025. In the meantime, feel free to revisit previous videos and don't hesitate to reach out with any questions or topics you'd like to see covered in the future. Thank you once again for watching, and I'll see you next year.